Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to Zacks Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined with David Bartosiak this week to bring you some great top stocks that you should be watching. My top stock is Eli Lilly, ticker LLY. And why should you be buying a drug stock right now? Well, they're pretty, I wouldn't call them safe, but at least they haven't been as volatile as other stocks during this time period. Now, Eli Lilly is one of those that is not actually trying to make a vaccine for the coronavirus, but they have made a nice diagnostic tool, and the rest of their portfolio is humming along. They are big in the cancer area, and they have recently released and got FDA approval to use one of their drugs on lung cancer. It's being used for several other cancers right now already. So Eli Lilly is in kind of key areas, and you can really see it with their earnings growth. And they're one of the few right now that has not seen any earnings estimates cuts. Let's take a look and see what that looks like right now. And here are those great earnings estimates. Now you can see for 2020 down there on the right-hand side that the street is looking for 681, the Zacks consensus here, up from 677 just 60 days ago or 90 days ago. So these estimates have not been cut, no earnings estimate revisions on the low side, only on the upper side. That's earnings growth of 12% for this year, 2020. And then look at 2021, another really hot year where the earnings estimates are on the rise too for next year, 802, that's earnings growth of another 17%. And then if we take a look at Eli Lilly's price to consensus chart for the last 5 years here, you can see that they've had the moderate growth going for the last couple of years, but now it's really stepping up the pace here as some of their research and development wing of the company is really kicking in here with some new drugs, and that is an increase in revenue and earnings. And so you can see these shares are at 5-year highs. There's a lot of complaint about tech companies right now being at 5-year highs during the pandemic, and this economic contraction that we're in, probable recession here, but there is a lot of fundamentals behind Eli Lilly right here. And then if we take a look at just what happened this year, this is the first 6 months of the year. You can see there in March when we had the big coronavirus sell-off, yes, these shares did weaken somewhat there, but hardly at all, right? You never really got these shares on sale, and now they've taken off again to the 5-year high. They've kind of been treading water recently as the safety play in them has faded a bit now that we're in the recovery from the coronavirus shutdowns. But, everything is looking good for Eli Lilly here. They also never cut their dividend. They're still paying dividend. It's only yielding 2% now, but still you're going to get that dividend going forward here probably for the rest of this year. There's no indication that they're getting rid of that. Shares are on a little bit of the more pricey side now, trading at 22 times. So you're not getting a super deal on them, but again, the fundamentals are such that you're just not going to get them on sale. It's too much is going right for them right here, and they're in the right area at the right time. So if you're looking for a Zacks number one that is paying the dividend and has not seen any earnings estimates cuts, keep Eli Lilly on your short list. Again, the ticker LLY. And now I'm sending it over to Dave with his top stock pick. You won't want to miss it.
Thanks, Tracy. And I've got my top stock pick of the week. It's BJ's Wholesale, ticker BJ. Now, with the global pandemic, everybody on lockdown, the new stay-home economy is here and perhaps to stay. So what's been happening is, rather than running out and going to the restaurants we all used to love and enjoy, we are going to the grocery store and going to the wholesale clubs to make sure we can load up on those necessities. BJ's here is obviously benefiting from the same trend that's helping out the more well-known brands out there, the Costco's of the world and the Sam's Club, which is owned by Walmart. So here's another way to play that trend. Let's go ahead and take a look at Zacks.com here. I'm going to look at some charts for you real quickly. So here we have BJ's Wholesale Club trading about 36 bucks today, but here's what I like to see. Zacks rank #1 strong buy, and I'll show you on the price consensus and EPS surprise chart here why that is. Style scores, an A for value, A for growth, A for momentum for a VGM composite score of A. When you're talking in terms of Zacks rankiness, this is about as good as it gets. So let's go ahead and take a look at this price consensus and EPS surprise chart here. And you can see 1, 2, 3, 4, 5, 6 consecutive quarters of upside surprises or meeting earnings expectations. Earnings have been pretty solid. These multicolored lines over here represent the evolution of our Zacks consensus estimates over time, and you can see things are starting to tick up here for this year. Makes a lot of sense. Stock prices followed along with it. This was stock that was trading under 20 bucks. Now all of a sudden, really rallying higher. So that is a good sign of things to come, is these estimates. So not just this year, but next year's estimates and the year after that. So 2020 moving to the upside, 2021 moving to the upside. When you see those positive moves along with a lot of earnings beats, that is a very good thing for the stock. So there you have it, folks. BJ's Wholesale, my top stock pick of the week. Enjoy the rest of your week, and we'll catch you soon.